97?
Yes, and I took the kids to the Statue of Liberty, and we were sweating how hot it was.
Got it. Got it. Well, I mean, and you're close to the ocean, dude.
We are on. Tw-
Yeah.
Literally 45 to an hour away from the closest shore.
Yeah. I mean, 45 minutes. Yeah. So, I mean, we are, what do we fear? Like about an hour and 20 minutes from the coast.
Yeah, maybe an
So,
hour and a half at the most. Yeah.
yeah. Yeah. So, it's all good, man. It's all good. So, all right. Well, welcome everybody. Let's kind of, since it's a smaller crowd today, let's kind of go around and real quick, while we're waiting for other people to join, is let's do a little intro. Michael, why don't you you're gonna be our guest of honor today anyway, so we'll save you for last. If you're going to introduce yourself.
Yeah, definitely. Hi, everybody. I'm Vic. I bring the right people into connection with John as his business development manager, and excited to be here today.
Awesome. Welcome. Jenny Campbell.
Hey everyone, Jenny K. Campbell in San Francisco, coming to learn some new stuff. My mission is to help business owners secure affordable healthcare. That's my project right now, and save up to 70%.
I know. I was talking to my wife, man. We got to connect because we already picked our plan, so we got to get that app done and get that
So
rolling.
yeah, do
So
by the end
we'll
of the month
connect.
so you're covered on September 1st.
There you go. We'll connect. Brandon.
How's it going, guys? Brandon Walcott, I'm the VCIO and president of TechTricks. We are a trusted local IT and cybersecurity consulting company for small business.
Awesome. Jason.
Jason messaged in the chat that he is also in another meeting.
Yeah. Yeah, never mind. We'll have to implement a rule going forward. If you want to be introduced and share about your business, you got to be live on the camera. So there you go.
Something just fell.
All right, let's do this. Get that muted. Get that muted. Let's see here. His tools. I'm going to take away everybody's ability to unmute themselves while I'm talking to Michael here. Got a little cat that showed up. That's cool. All right. Hey, so Michael, go ahead and let me do this here. Michael, introduce yourself, and then we're going to have a conversation about our topic for today, and then we're going to open it up for live Q&A from the audience.
Well, I'm Michael. I'm an accountant here in Chelsea, and one of the things that we love to do on my firm is helping small business save money with IRS. So we use legal and ethical means to do that.
Fantastic. So today is the fourth week of the month, which means we're going to be talking about finance. So accounting, bookkeeping, taxes. It's a perfect timing because what do we got coming up next month, Michael?
Hmm.
What
Extensions
do we
are
got coming
due.
up that's your favorite time of the year, dude?
Taxes. Extensions are due next the 15th for
Yep.
past two businesses, the LLs partnerships, the S corps that are out there.
Yep. Exactly. And then we got the following month, October 15th. That's going to be for everybody that's filed
And
their
now,
personal extension, right?
yeah, I'm gonna have next month and a half of fun.
It's all good, dude. Yeah. So one of the things that I got into a conversation with, and I want to get your opinion about this. So one of the things I got into, and actually, here's a really good question for you because I got a client and we they found a business they want to buy.
Okay.
Okay. You're going to buy it for, and I'm not going to get into the details of the type of business. I'm just going to talk about numbers because the rest of it's pretty confidential. 1.1 million.
Mhm.
Okay. EBITDA on that. For those of you that don't know, earnings before interest, taxes, depreciation, and amortization. Is I think on this one about $385,000 a year. Okay, on 1.1 million. And then the ERC, the add back all the miscellaneous stuff that the owner takes. So the ERC number is about 400 and I want to say 435,000. Okay, so after talking to the owner and so forth, they're an S corp. Okay, so and here's the thing: I want to numbers matter. Okay, and I want everybody to hear what I'm about to say. In a negotiation, this will be, I don't know, like the 14th negotiation I've been in this year on selling and buying companies. So this company's been around for 27 years. Okay. Um, they have, I think the free cash flow number is, about 435,000. And and so now it's coming down to, and here's the deal: when you are going, and this is for everybody, when you are in a negotiating position to buy or sell your company, have an experienced negotiator with you. Okay. And the more you talk, the weaker your position is going to get. Okay. So we're buying this company, and they have a very, well, what I thought was going to be a very seasoned business broker. So we get on the call, and the owner just can't shut his mouth. Okay. The person selling the business just literally just going on and on and on and on. And I prep my client ahead of time. I said, you don't, you don't, you don't do nothing. Okay. Just zip it. Okay. There's only a few questions I want to ask. Let me do all the talking. And so this guy, everything that's put out there, everything looks great. The numbers look great. Okay. But at the end of the day, the business it can't run without him right now. Okay. That's not how it was put out there. That's not how it was portrayed. Okay. So instantly, now you're an accountant. Okay. So you evaluate this stuff. So the first question is the guy, okay, I'm gonna pre-frame this question. Can't be quiet. Okay. Telling me all the stuff that his business and his revenue relies on him being there. Okay. Now he claims he doesn't have to be there to run without him, but the more we start asking questions, it's okay to talk, but they need to be questions. Okay. Don't be sharing information. Don't be showing your cards. Right.
Mhm.
And so he's sitting there, we're asking questions, and he just going, I'm like, man, we're gonna add that, we're gonna add that, we're adding that card to the deck, we're adding that card to the deck. And I'm private messaging my clients. I'm going, don't say shit. Excuse my language. Don't say anything. Don't do anything. Let him continue to talk. Ask him questions. Ask him more questions about him. How great he is. He's got an ego, man. Just pat him on the back, right? He's going on and on. Now, as an accountant, because I'm going to bring you in on the value, because I believe we're gonna be at a place of giving him a letter of intent later tomorrow, probably. Okay. And then we're going to need to do our due diligence, and I'm going to need an accountant to come in and do that piece. So everything I've just told you, I know I'm not expecting it to be accurate, but based off of what I told you. Oh, and by the way, he wants to, if he's going to stick around, he wants to be paid $250,000 a year in salary. Okay. And he's willing to stay for another 1 to 3 years. Okay.
Mhm.
Based off of that, what does that do to that EBITDA number? And what does that do to that free cash flow number? And if you're the accountant on this deal, what just happened to that deal based off of what this guy said?
Guys, well, it's all about him. I would,
Mhm.
I don't know. I'll be honest, you stumped me on this one. Um, the business is all about him. He's talking about himself. I'll be cautious before I even make the attempt, because what happens if one next day he leaves and he's to go to business, right?
Yeah.
Yeah. I don't know.
So let's back up a little bit because I want to
Mhm.
give everybody a background and a format to work from, because these numbers are very important to understand. Selling it for 1.1 million. Where'd you go, Michael? Okay.
Right here.
1.1 million. EBITDA number 385,000. So right out of that, just those two numbers, what is the multiple he's using to get to 1.1?
What's 5?
Goodwill into that number?
Yes.
Because that's worth something too, right?
Earnings before interest, taxes, and depreciation. $1,107,000 divided by 385,000, 2.87 times its value. Just trade off of EBITDA. Okay. Now, keep in mind, 385,000. I want you to hold that number. He wants to sell it for 1.1. But we have now discovered the company will not run without him. We're gonna have to keep the dude around full time for 6 months. Then, so here's the strategy. We're gonna keep the guy around for 6 months at full salary, 250,000. We're gonna keep him around for 20 hours a week the second 6 months. Okay. Then after the first year, we're gonna keep him around for 10 hours a week for the next year, and then possibly 5 hours a week the third year. Okay. So based off of that, that drops that EBITDA number well below 200K. Okay. Now, what he doesn't understand, okay, is if we use 2.87 to get to that, and I'm going to drop that EBITDA number. The EBITDA number is going to probably drop to about 195,000 times 2 point. What did I say? 2 point. What did I say, Fury?
2.87.
2.87. So his new sale price went from 1.1 million down to 559,650. Okay. And that's the importance of knowing your numbers. See, he has it currently marketed and put on the market. Now, if we're just doing it from a straight EBITDA number, and I haven't even talked about the building and the computers and all the other stuff, but just on a straight EBITDA number, 2.87%, if it did not run without him, if it ran without him, I'd pay him that all day long because that's a steal. Like he should be going to market with about 4 to 4.5, given his client list that I've seen and all the other contracts that he has. But because, and here's the most important thing, this is why you need to have your accountant with you. This is why you need to understand business numbers, is because his mouth, let's do the math, 1107, what was that number, 500 some thousand?
570 something, I believe.
575, right? Because he couldn't shut his mouth, he potentially cost himself $532,000. That's lesson number one. If you're going to spend $535,000, you might as well learn a lesson. Next, Michael, this is the tax strategy question. On an S corp, when a person sells an S corp, how does taxes work?
This won't be the part of capital gain.
So when they sell this business, they're going to pay capital gains
Mm-hmm.
on the net proceed, right?
Yes.
Okay. And they're going to pay it through the S corp or through their own personal pass through.
Portion.
Okay. And the capital gains rate is what?
Wherever the portion where it is. Wait, no, I'm sorry. 21, 25.
21%.
Yeah,
21%, right? Yep. Okay. So now check this out. Tell me what you think about this, because I'm getting some free consulting here today. But it's important for everybody to understand. Now, he wants his 1.1. Okay. If we buy it and we can keep the dude around, the deal that we're going to come into probably is like, hey, we'll give you your 1.1. And now here's rule number one in negotiation. Okay, you want 1.1? Yeah. I'm going back and forth with his broker. Do you want 1.1? Broker wants 1.1 because the broker gets their commission at escrow close.
Mm-hmm.
Okay. Do you want your 1.1? Yep. Okay. It's called white flag negotiation. And this is where asking a bunch of questions puts you in a very powerful position. All right, 1.1. So if we work a deal and you get your 1.1, we have a deal. Is that what you're telling me? Yeah. Okay. Done. All right. Here's what I need in return. And here's where it gets really good. Your guy wants $250,000 a year to stick around. We already verified that it's got to stick around for 6 months to a year minimum. Without it, his business, according to my numbers here, if I have to have him stick around because the business will fall apart without him, that EBITDA number just dropped, which means the sale price just dropped. So how about this? How about we give him $250K cash up front, and the rest we pay out instead of us paying him $250,000 in salary. He sticks around and we pay out the rest over the next 2 years or 3 years. Okay. Cool thing is, if he wants, now, because you got to understand, Michael, correct me if I'm wrong. I can also negotiate this deal and go, hey, I'll pay out your 250, but I'll do it through payroll instead.
Mm-hmm.
Now, I dropped out of high school, so do you pay more taxes on earned income versus pass-through income?
On income.
Huh?
On, because the capped is 21, while on at 250 could be 30-something%.
Yeah. So if I give him what he wants at 1.1 plus a $250,000 salary for 6 months, and then 125 for the next, half of that for the next 6 months, and then a tenth of that for the next 2 years, and I'm paying it out through payroll, what's the one component that I'm also going to have to pay, Mike?
It's the payroll tax.
Employer taxes, right? Per
Mhm.
employer taxes, federal is what's the rate?
16%. Well, 17%, but 16% if you do self-employed, but yeah.
Yeah. And if you're in California like we are, you got that additional state tax, So now all of a sudden this deal is no longer sweet at 1.1, because if I do the payroll plus the purchase plus all that, I'm going to be probably about 1.4 million when everything's said and done. Now, why am I spending time on all this? Because I want every single one of you on this live call and listening to this recording to understand the importance of having a good, solid accountant, tax strategist, and bookkeeper in your business. Okay. I've worked with Michael now since February. Dude's an unbelievable dot the I's and cross the T's person when it comes to numbers. Okay. And yeah, I promise I'd never pitch on this, but I am literally going to endorse his butt here today. You're coming into tax time, and if you have followed any of my advice, any of our advice that we've given over the last 2 years, you all should have filed an extension. Your entity extension is coming up next month. Your personal extension is coming up in September. Now's the time to get with Michael to have him look over your stuff. Okay. And if you don't know how to read numbers, okay, then here's what I would highly, 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 highly recommend you do. At minimum, reach out to this dude's schedule. I don't know, Michael, maybe it takes an hour, you know, but take an hour, have him go through your financial statements with you and show you how to read them. Okay. I am still shocked, dude. I swear to God, I'm still shocked at how many successful business owners. I just signed up a guy to doing a strategy session for him and his departing CEO. 40, I don't know what, 42-year-old company, $4.5 million. He's the owner. 42 years. Doesn't understand his own financials. My client was going to buy him. I got the financials. Went through them. Backed out of the deal. I'm like, I can't buy you. Nobody's going to buy you. Yeah. Got involved in the deal. I'm like, who the heck made these decisions? Here's the other reason you need to know your numbers. And keep in mind, I said 42 years. Hasn't raised his prices in 27 years. Didn't realize that 70% of his clients were costing him money. He was losing his butt. Okay. Fortunately, the CEO was smart enough to go in and change everything, but might be a little too late. I'm going to see what I can do to turn it around, but you got to know your numbers, guys and gals. You just got to. You got to take the time. It's not about how much money's in the bank.
And unfortunately, a lot of small businesses think like that.
Yeah, and I'm just being passionate about because I've dealt with like 4 of these sad stories this week. Super cool. I mean, heart invested business owners. This is probably the saddest story. Is 42 years, man. It's like can't. It just makes me sad. It's like pouring your heart and soul just to be in a situation 42 years later and you cannot get out. It's sad. And it doesn't have to happen. And so I want to implore every single one of you listening to the recording on the live call, get with Michael, okay? Know how to read your numbers. You don't have to become an accountant. But I knew I was just sharing this story. I'm doing this marketing campaign. I'm still getting ready to form a whole new company and going back through and all the story, the history and all that stuff. And I remember 2006, I was scared to death. I borrowed 10 grand from my mother-in-law, put a second on my home for 25K in the HELOC. 2 cars were paid for, refinance. I had to come up with $50,000 cash just to start my IT company because I was not an engineer, you know, and put it all on the line. But the one thing I knew going into it is I knew how to sell. I knew how to get attention. I did not know anything about numbers. I didn't know anything about hiring people, HR, operations. I mean, I'm like, but I took the money and I trusted Mike Sastry, not this Mike, but a different, by the way, it's a different Mike. I just connected those 2 dots. uh, you know, trusted Mike and trusted a couple other people to educate me. And And I'm glad I did because, it saved me a lot of money. And I want you guys, I'm telling you, man, just if you do nothing, if you get nothing else out of today's call, you need to understand your numbers in your business. Again, it's not what's in the bank account. Okay. Any questions? Let me or Michael, you got anything you want to add? Emotionally attached to the business. Yes, he is definitely emotionally attached to the business. I mean, he's got employees that have been there for 28 years, man. Unbelievable. Entire family's dependent upon this situation. But at the age he's at, he's just burnt. He's burnt out. He wants out, man. Just wants out. And expected. Can you imagine pouring 42 years of your life into an asset that you expect to be able to sell at the end of the day and you just can't? Yeah. So it sucks. So Michael, you got anything else to add before we open it up to Q&A?
No, I think that's it. It's also
Okay.
that time of year to kind of do tax planning. This has a
Yeah.
3 year you look back, looking at your taxes, to see what we're doing the past 3 years. It's time to think ahead.
Yeah. Yeah, definitely do that 3-year look back for sure.
Mhm.
Before you file the extended return. All right. Anybody have any
I have a,
questions for
I have a
Michael
question.
financially or anything else? Go ahead.
John, I have a question. You said he had an ERC of 435K. Are you just giving that as an example of his output for payroll? Did he get that already, or is that still
So
pending?
and Michael, you can correct me if I'm wrong here. How ERC is calculated, right? Is you got EBITDA, earnings before interest, taxes, depreciation, and amortization. Okay. Then you got to go back through those financials and look at all the things, all the expenses that are going to go bye-bye if that owner leaves the business. Okay.
Mhm.
So there are certain things like accounting costs, administrative costs, his a portion, right, of his payroll, because not all of his payroll is going to be tied to the operation, right? So like when I sold my company, I mean I had a big salary from it. But when I went to sell it, in order to get that right number, I had to go, okay, if I had actually hired somebody to replace the work I actually do in sales or marketing, all the other stuff, I got my business down to where I only had to operate about 10 hours a week. So I had to calculate that 10 hours that I would have to hire somebody to replace me at a fair market value. Not to mention the cell phone stuff. There's all kinds of other perks that we get as owners that I can legally write off. Okay. Um, home office reimbursement expense. Okay. Um, things like the Augusta rule now. Okay. Where if I have an entity I can rent my house to, if I own my own home, I can rent my home. Like in your case, you own your own home, you can rent your home at a fair market rental rate for 14 days a year. And the income derived from that is not taxed. Okay. Um, it's all that type of stuff that gets added back on top of the EBITDA number. And that really gives you what's your free cash flow number, right? This is what the business actually produces for the owner. Okay. So, am I right or am I wrong, Michael?
Sounds right to me if I find you correctly.
Yeah. Did that answer your question?
My question is, wouldn't that be considered an asset because it's like money pending to be paid out to him, right?
Could be,
Yeah,
but
because he
the
hasn't
new, the
received it
new,
yet. But then on the other
the
hand,
new,
if he did receive it, then there's a tax consequence because you have to pay back. It's not free money. You have to pay taxes on that ERC.
no, no. So the ERC number, where that comes from is when I buy the business, right? those things are going to be taken out of my profit because I can't just like I those are things I'm going to have to either do myself or hire somebody to do it, right? There's just certain things in my business that I'm going to do that cost money. Okay. And either I got to hire somebody or I do it. There's certain expenses that are going to disappear when I leave that are going to become the new owner's expense. Okay. So, and the devil's in the details when it comes to the numbers. But I see what you're saying. And again, it all comes down to how that deal is structured at the end as to what the tax liability and consequence is going to actually be.
Yeah, because that's going to affect the sale price. If there's money, it's like accounts receivable, right? We're expected to receive this, or if we received it, then there's a tax consequence. So in
Yeah. Well,
negotiations,
sale
I think
price,
that's
yeah,
going to affect the sale
yeah,
price.
yeah.
That's all I'm saying.
The sale price is going to be $1.1 million. Okay. So depending on how that $1.1 million is paid out will determine how the taxes work. Okay. So in a business purchase agreement, when you come down to, it's a letter of intent, then we're going to do all of our due diligence, and we're going to get all our due diligence together, and then we're going to create what's called a business purchase agreement, which, I mean, I've seen some of these things like 65 pages, right? And so, but in the business purchase agreement, it's all broken down. This is this asset, this asset, this asset, this goodwill, et cetera. These are all things that are divvied out in there. And that's where you need a good tax person and an accountant to help you with that business purchase agreement. Otherwise, great. I sold my business and just to have the IRS rip your butt off.
Mhm.
Okay. So, and again, it gets even worse if you failed to, let's say you form a company. Okay. So when you form an entity, like, and let's say you want to be an S Corp, right? Well, when you form the company, you are a C Corp. Okay. All corporations get formed as C Corps, with the exception of LLCs and that sort of thing, right? But you have 75 days from the day you form the corporation to file your S Corp election status. Well, if you fail to do that, which I had to sadly tell one client, I don't know, back in April, poor gal, man, been in business 29 years, didn't realize the tax consequence of selling that business now as a C Corp versus an S Corp. So not only is the corporation going to get taxed on the sale, then she's going to get taxed on the profits of the sale as well. So when everything's said and done, the IR and the S is going to end up in the state's going to end up with almost 60%. Okay. Now, Michael, check this. Go ahead. Go ahead, Jenny.
Oh, it's okay. With the S Corp or C Corp, you have to make a certain amount of income, like 150,000 or plus to switch.
I mean, it's all relative. Depends on what you're trying to do. Michael, answer the question if you want.
I'd be honest, when I advise a client to switch from a S Corp, it's a calculated decision. I sit there and make calculations, see what's best for them. There's extra expenses that he or she might call. She's gonna have to be on payroll, which is expense there. Doing extra firings, etc., etc. So to me, that number could be relevant. It all depends on the client.
Okay, thank you.
Mm-hmm.
Yeah. So, because the difference between an S Corp and an LLC, Michael, from a tax standpoint, is what?
Self-employment tax. LLC
Huh?
is the LLC, the person owns it is the owner, while the S Corp is the person is a employee, so it's the saving on the self-employment tax.
Yeah, then tax cuts on LLCs is horrible.
Yeah,
So-
you get hit with the self-employment tax mostly, the 16%.
Yeah.
Yeah. So being an LLC versus an S Corp in most states, especially in California, from a formation cost standpoint, it's the same. Okay. From a formation cost standpoint, it's the same all across the country. Okay. What's different is when the taxes are held. So why would somebody do an S Corp versus an LLC, Michael?
Majority is to save on the self-employment tax. It's the
Yep.
biggest
Taxes.
savings.
Yep. Both of them provide protection. In other words, they can sue the LLC, they can sue the S corp. As long as you have your corporate formalities in place, they can't get to your personal assets.
Yeah.
Okay, unless you committed some sort of misrepresentation or fraud.
Mhm.
Okay, they can't get to you personally. Okay, if you got a bunch of assets or you want to take on foreign partners.
Mm.
Okay, like where's Mark? Mark's here. Mark's in the Czech Republic. Okay, Mark and I are forming a corporation together. Well, we have to form an LLC because he's going to be a foreign, person that's in a different country. I can have a foreign person be a part of an LLC. Okay,
Oh.
so that's why I'm not going to do an S corp with Mark.
Oh, gotcha. And then like
Okay.
a question, when you pay quarterly, like so when I set up mine at the commission place, I don't have to report quarterly. I just pay when I pay my taxes, but I noticing like I'm not getting my child tax credit or anything. So like I have an online account, but how do I make a payment? Because it's like you only seem like if you owe, you can make it a payment, but like because I need a payment so I could get all my credits.
Anyway, LLC?
Yes.
Okay. So your accountant should give you estimated about tax vouchers last year, in April. And those are the vouchers that you used. You could do estimated taxes and we could estimate what you make for this year. But typically I just take the numbers from last year. That's an easy guide.
Okay.
But honestly, Commissioner, maybe you and I should get onto a call together and talk to this outside of here because it seems like you will have some. I think you and I need to talk outside here for sure.
Okay.
Yeah, I'll text both of you each of those numbers. So
Thank you.
Thanks.
but now check this out. So reason LLC makes sense for me and Mark. Guess who gets to pay the self-employment tax on the LLC? To be a Mark form a company corporation, and a Mark is in a different country. The money he gets not taxed at all. He's a foreign entity. Okay, he deals with those taxes in his country. Okay, I own a company called 10X Consulting Group. I'm thinking this new LLC needs to hire 10X Consulting Group as a consultant to the new LLC. That's what I'm thinking, Michael. I mean, it's a new entity, dude. It needs a consultant.
I agree.
You follow what I'm saying?
I agree.
Are you following what I'm getting at here?
Crazy.
Oh, I do this all the time.
I mean,
Yeah.
that LLC man's going to struggle for a couple of years. So, and that's all I'm going to say on a live recording. But it's those types of tax laws that exist in this country that are legal, by the way. Not talking about anything illegal here. Okay. I'm saying people want to bash these large corporations and business owners. You know what? Microsoft, okay, and you, Mr. LLC or S Corp, C Corp, sole proprietor person making less than 100 grand a year, guess what? They have their tax advantages. You have a lot of the same tax advantages. Okay, that's why education is important. Okay, so understanding what your long-term goals and ambitions are going to help you do the right entity. Okay. What other questions does people have? Anybody else have any other? We can talk about accounting. We can talk about bookkeeping. We can talk about sales, marketing, business challenges, whatever you want to talk about. It's your time. Right? Everybody have the? Yep, I put it to where they can unmute themselves. Michael, any you know what else would be a good thing to talk about would be if you have kids, by the way, Okay, like Brandon, right? Brandon's got some kids. Okay, 2017. Correct me if I'm wrong here, Michael. Okay, the old Tax Reform Act took the threshold to put your kids on payroll from 7.5 years old down to 0. Okay. However, if you have an S corp, you don't get to take advantage of that tax rule.
Correct.
What do you have to do, Michael, if you want to take advantage of that rule if you're an S corp?
Form another LLC and pay the LLC. They have the S corp pay the LLC.
And
Now,
the new LLC is going to be called a what?
wherever, make it down to your spouses and have the spouse own it. You could, and
Yeah. The other thing you can do is you create a LLC that's a family management company.
yes, yes.
Okay.
But the only problem is, and I noticed that with the strategies, for example, in New Jersey, I can't do that.
No kidding.
Yeah,
I
no
thought
matter what.
California was bad.
Yeah, my kid, I can't hire my kid until he's 14.
No kidding.
Mm-hmm.
Now, is that just for state or is that federal or both?
It's just a state.
Okay. Oh, the state. Okay.
Yeah.
So, but from a federal standpoint, get this, and this is what I thought. I was like, oh my God. Like it used to be, there was a max. I forget what the max was, like 6,500 or something like that. And with that tax law they passed, up to $12,000 without paying payroll taxes. And then you could fully fund an IRA up to $6,000 on top of that.
You can
So
do
each
that. Yes.
child, you can get an $18,000 write-off. I was like, dude, that's what I'm talking about. Now, documentation is very important. So when it comes to bookkeeping, Michael, how important is documentation?
Oh, very important. I don't know how to express how important it is. Cover your assets. So this is my favorite term I use to all my clients, and a lot of them still don't do it right.
Yeah.
So yes.
Yeah.
And that
Yeah.
trick could also pay for the tuition you do college, what food he eats or she eats. There's a lot of benefits of doing that trick, but don't do it in Jersey.
Yeah. Yeah. Now the isn't the ERC still pending until like April of next year?
Amanda, if I remember, yeah.
Yeah. And so how does the ERC work? What is
The
ERC and how does it work?
the employee retention card.
Yep.
So during the COVID time, the IRS and the Fed were trying to have you employ all you make sure you keep your employees paid and everything. Now, you still can make that. You could claim those credits by amending your payroll taxes and your business taxes. So you could go back if you want to on all of those. I'm going to be honest. I'm not an expert on that. That's not my expertise. I do depend. I have a CPA that does work on that. He became an expert on that, so I rely on him.
Yeah.
But in a nutshell, that's it.
Yeah. So the employee retention tax credit up to $26,000 per employee per quarter. And it's 6 calendar quarters that are eligible. And there's about 17 different ways it applies. Okay. That's why you need a CPA. Okay. You need a team of people. So I did one for connected one of my clients. She got what 95,000 back. Just did one for a client that Furyk and I know, 171K. Okay. Now, at the end of last year, the IRS put a hold on the processing of those applications. Okay. Those things have been released and starting to be freed up. So it's still not too late. If you had employees in 2020, 2021, okay, for 6 calendar quarters, you should really look into the ERC. It's free, doesn't cost you anything. Okay. But it's not just the employee. I mean, Jupiter has, they really took advantage of it. It's like 17 different ways that you can qualify now. Okay. And, but make sure it's done right. Otherwise, you end up getting a surprise visit on the back end with a bunch of income taxes. So that's why you got to work with a tax guy. Yeah, you're right. It's not tax free. So what else? Okay, so next week, okay, is going to be the kickoff to a new month. Okay, we're going to be talking about marketing, but I want to give Brandon a little bit of time here because Brandon and I got something special coming up next week on the 5th that I think every one of you would benefit from. Okay, and so Brandon, what are we talking about next on the 5th of September?
Great question, John. Yeah, so September 5th, John has kindly invited me to host what I'm calling a mini series masterclass about small business cybersecurity. We're basically going to give you some insider knowledge on how to protect your small business from cyber attacks, from cyber threats, protect your assets and all the legacy you've been building. Because the simple fact of the matter is, one single cyber attack can take down everything you've built. Especially if they start stealing some money, it's difficult to get that back.
Yeah, absolutely. So the registration link, Furyk, or where did Gene go?
I'm not sure. Mark left, but I'll copy paste the
Anyways, we'll get you the
registration link
info. They're gonna be doing a bunch of email blasts, promos, things like that. So I'm gonna be putting it up on the event page at johnpyron.com. So it'll be up by tomorrow. If it's not there already, go to johnpyron.com, click on the events page, and the registration link and all that stuff will be there. And then finally, I think tonight or first thing tomorrow, we're launching the registration and for the 5-day get more referrals challenge. It's going to be a full week of, I got tired of teaching this to tens of thousands, I mean, almost 100,000 people, how to go into a given month instead of waiting around for getting organic referrals. Okay, you want to fix your bookkeeping, you want to fix your tax, you want to fix your accounting, you want to have new problems to deal with, get some referral systems in place so you can start printing more money because referrals are a whole lot easier to close. It's a whole lot higher price point. They don't go around checking your prices and references because you come highly referred. And I got tired of making cold calls in 2003. So I created these referral systems and built multiple $1 million companies. And so at the end of the day, I've taught it to tens of thousands, probably 100,000 people over all these years. But only 10% really actually do the work because it is work to put it in place. But once you put it in place, it is a system, it's a business system that runs with or without you. Okay. And so what I've decided to do on this 5-day challenge is 1 hour a day. I'm going to teach a different component of it. You're going to have homework. You get 22 hours to get the homework done because the video and the recording and everything disappears. Okay. But you're going to get it done. So by the end of that week, you're not only going to have your 3 referral systems in place, you're going to actually get referrals that week. Okay. And it's not going to be a pitch fest. Okay. And I ain't doing it for free either. It's like $97. Okay. So, but my guarantee is if you don't get 10 times that and value back by the end of the week, here's your money back. Okay. But you got to show up every day. You got to have your video camera on. You got to prove that you did the actual work. Okay. because I'm tired of running into business owners who are great business owners, great hearts. They do a great service and they're broke as heck. And there's no reason for it. Okay. Or they struggle. There's no reason for it. There's too many people out there. If you do a good job in your business, there's too many people out there that will give you a referral. You just got to simply have a system in place and know how to go ask them. Okay. And I'm going to really nail that down. And so that Mark's going to launch. I don't know. Is Mark still here? No. So Mark's going to finish up that funnel. I think they're putting the final touches on it today. It's going to go live and then it's going to be monthly every month for the next year. So he's got an affiliate link, by the way. So I'm going to share this just with you guys. I told him to put an affiliate link in there so that way I can get you guys the affiliate the registration link. So that way you guys, I forget what I put in there, like 25% commission on everything, some ridiculous number. So if you just share it out to your network and people register with your affiliate link, you just start getting money. I mean, that's a good way to get money, by the way. Michael, I guess that would be called pass-through income. You didn't really do anything for it. Other than share a link, right? So anyways, I hope this has been valuable for you guys today. Anybody one last time, anybody have any business problems, challenges, questions they'd like to get some live coaching on today? Nope. Okay. You guys have a blessed day and a super blessed